Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How's it going today? We're financial advisors. We work with all size investors. I always find it kind of funny that the big companies only want to work with people that have like $500,000 or more already. They're all fighting after those customers, but don't you need help if you don't have any money yet? You're just getting started investing. Shouldn't you get those tips and tricks to help grow your net worth overall? Well, that's what we set out to do here at Jazz Wealth, and hey, so far so good. Well, today we're talking about something that keeps coming up more and more. I've seen a lot of comments on this, getting a lot of questions on gold. I see gold taking off. Is now the time to buy gold? Well, first of all, let's talk about it. Why is gold taking off? Why all of a sudden have we moved back up to that $1,400 number? $1,400 per ounce is where it's at least as of this taping here. Well, there's 4 different reasons, wouldn't you know it? 4. I love doing the 4 things here. The first is the Fed. We just had the Fed meeting where the Fed took away the comment of being patient to raise rates. They really seem like they're on this path to sort of make people feel like they're going to cut rates. You don't want that, by the way. We do not want the Fed to cut rates. Historically, very bad for the stock market, especially given that they just raised rates. So the Fed's sort of backing off some of their rate hike commentary, and that has a lot of people thinking, okay, maybe they're going to cut. At worst case, they're just going to stop for a while and not raise rates. It's expected that they won't raise rates the rest of the year, and 99% of all of the sort of traders in that space are predicting that they will cut rates actually by the end of July. We'll see, right? So number one, you've got the Fed cutting rates. When the interest rates are low, people move towards gold as an investment. You can do that in a number of ways. You can buy gold directly. You could buy the futures contracts. You could buy ETFs like GLD and GDX. We'll get to that in a second. And those are different ways to do it. Number 2 is China, right? And Russia, really. But China is actually on this huge buying spree of gold. They are the number 1 buyer of gold on the planet right now. In fact, this is the 6th straight month that they've added to their sort of stockpile of gold. They went from about 59 million ounces that they've had for a while, and now they're on track almost to hit 62 million ounces. They went from 59 to 62 million ounces in less than 6 months, really. So that's number 2. By the way, China and Russia are the 2 largest buyers. China is the largest, Russia is the 2nd largest. They're all trying to move away from the US dollar. Well, you could blame it on Trump, you could blame it on whatever, really, but they're trying to move away from that, and it's obvious. They're buying more and more gold. Number 3 is the ETFs. A lot of money coming into ETFs. Just did a video earlier this week talking about how GDX, which is the gold mining index, is the 4th most active ETF in the last 30 days, meaning it's had the most amount of money trade hands in that ETF. Now, GDX is a gold mining index, which is basically comprised of the companies that mine for gold. It's not gold physically, it's the companies that go out and try to get the gold. They're mining for it, putting it together, and offering it to the public or wherever they sell it to. So a lot of money moving into GDX. A lot of money moving into GLD, which is an ETF to buy physical gold. If you don't know what GLD is, it's an ETF that when you buy gold, they actually supposedly go buy gold and put it in a warehouse for you. So they actually store physical gold. It's not a proxy. It's not a direct sort of participation in gold, but it is, right? Because you're actually supposed to have physical gold earmarked for you in a secret warehouse that nobody knows where it's at, actually, believe it or not. CNBC did a story 2 or 3 years ago, I want to say, that Bob Pisani guy, he was blindfolded, taken to the warehouse, and actually shown the supply of gold that GLD houses. Well, when people buy GLD, that company has to go out and buy physical gold, hence raising the price of the overall price of gold. So GLD also have seen more inflows into that, and so you see that spike, of course, here in the short term. And the 4th reason that gold is actually moving higher here is it's a technical breakout. Let's go to the screen here real quick. I don't have a chart to share with you today, but I'm going to draw this out. Here's what golds look like over like the last 20 years, and then this area right here to here, well, let's just do that. That's been about 2014 to now, 2019, right? So in that time period, gold hasn't really moved at all. It's been in what's known as a sideways technical range. What happens is, and we're going to do a video on this in a couple weeks on breakouts, what happens is when it trades above this area, people look at that and they go, hey, it's making a new move. Maybe this is going to happen again. So it's been quiet for like the last 5 years, and now it's starting to break out. We're up here at this 1,400 per ounce area. Down here at the lows of this range, we were at about 1,100, almost down to 1,000 an ounce. So you see, you've been in this range with no real growth, really sort of sloppy back and forth. Now we're breaking out, and technical traders are saying, hey, this is the time to buy gold. While that's exciting for all of those reasons, then you may believe gold is moving higher. In the ultra short term, meaning over just the last couple weeks, unfortunately, gold has found itself extended in the short term. So I'm going to go back here and just try to illustrate this for you real quick. What happens is, since it broke out, if you were to look at like a chart of the last 6 months or something, you would see this, and then you would see this, right? Sort of a reverse waterfall to the upside. And so what's happened here is, if you track sort of the moving averages, the 20-day moving average or so of the price of gold, you find that we're very much separated from the average price. So I'm just going to put this here as the 20 moving average. You can go look at this on a chart if you like. When we've been trading around it, people like to make bets there. And the best example I can give you is, if I gave you money and I said, go invest for me, find a way to make me a profit, what would you do? You would go look at something trading close to about the average. If you were to buy gold here with my money, I would say, why'd you pay so much? The average over the last 20 days, 50 days, 200 days is way down here. Why are you overpaying for the price of gold? And so for that reason, you're going to have a lot of people waiting for this to pull back and then possibly go sideways or pull back all the way to the moving averages. But over time, that average will catch up. And so for that reason, in the ultra short term, it's a hard argument to say that you want to buy gold, gold miners, gold ETFs, any way that you want to participate in gold, even down to the individual companies that mine for gold. It's very tough. They're all very extended in the short term. So it doesn't mean you can't buy it. It means you either step in little by little if you're interested in gold. I'm not suggesting you buy it. I'm just saying if this is something you're looking at, you either step in with a little piece at a time. Like if you were going to buy 1,000 shares, you buy 100, you let it fall a little, you buy another 100. Average into it so you get your full position, or you simply put it on like a watch list, write it down somewhere and say, hey, every day I'm going to check in. Where's gold? Still moving higher. Where's gold? It's pulling back. Oh, good. Where's gold? It's pulling back. It's pulling back. It's pulling back. And then you strike once you find that you're paying more of a sort of an average price, or even below average price if we get lucky with that. So that's really all I have for you today. I get it. Gold is exciting. I also want to point out, notice how people move in flocks. We were just talking about crypto. We've been talking about pot stocks. We were talking about those IPOs, the Beyond Meats and the likes that have done really well, and everybody's going, should I buy that? Oh, wait, pot stocks are good again. Should I buy that? Oh, wait, crypto's broken out again. Should I buy that? Now we're looking at gold, and everybody's saying, should I buy it? Don't be a flock trader. Let things go out of favor, then come back to them when nobody else is looking. Kind of like crypto, right? It went quiet for a while, a lot of volume in there, a lot of people buying that up, and now they're getting rewarded. Don't chase things like that to the upside. That's just how I feel about it. You could do whatever you like with your money, but if you need help with your investments, I hope you'll check us out at Jazz Wealth Managers. JazzWealth.com is the website. You can see everything about us. Our portfolios that we manage are on there. We're the only advisor to actually post and manage our own portfolios and show the performance of those. You can also see everything about us on our website. And if you like to schedule a call, you could do that, of course, as well. Hey, later on, we'll be back at 5 o'clock to do the Closing Beat. It's our live stock market update show where we'll cover the price of gold and we'll see what's happened day by day, keep you updated. It's live here on the channel. Hope you'll subscribe and check it out. We'll be back at 5 o'clock Eastern Time. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.